All right, you real estate investors, today we're going to talk about 7 red flags to watch out for with your property management company. I think this is an important video for all you real estate investors out there because property management is one of the most critical yet underestimated parts of owning real estate investments. Your property manager is the front line for your investments. They handle the tenants, they oversee maintenance, manage budgets, and they represent you to the marketplace. When they drop the ball, you pay the price. We've invested in portfolios of multifamily, and I tell you, there's nothing worse than having that feeling that maybe your manager is costing you more than what they're saving you, or maybe they're just not doing their job very well. This video is going to help you spot the warning signs early. It's from my experience, of course, because I saw a lot of this. Let's start with poor communication. This was my pet peeve. If you get an email that goes unanswered, or you have to chase down your manager for updates, that's a huge issue. It was for me, and I know it should be for you. Communication delays almost always mean there's other parts of the operations that are slipping too. You want a manager who's responsive, very professional, and easy to reach, not just to you, but to your tenants as well. Next, we have lack of financial transparency. In real estate, numbers tell the story. If your management can't produce clean, timely, and detailed financial statements every month, that needs to be a red flag for you. At a minimum, you should be receiving reports that tell you occupancy, delinquencies, including late fees and any evictions, what your operating expenses are, and how your net operating income or your NOI is trending. Any delays, vague line items, or unexplained variances, that's a sign they're not managing your property the way it should be. I'm going to give you a tip here. Require full monthly reporting that includes general ledger detail and bank reconciliations, and that's going to help a lot. So let's talk about a few things that could be hidden in that fine print. You've got to watch out for vendor markups. That's a big one. Coordination fees or maintenance surcharges. It's not uncommon to see an additional 10 to 15% added on top of the vendor invoice that the property management company keeps. Now, I know this doesn't sound like a lot of money if you have 1 or 2 properties, but if you have an entire portfolio, this can run into the thousands. What you want to do is insist on seeing original vendor invoices and be sure to define exactly what services are included in the management fee. All right, next we have poor tenant screening, and this is the reason you want to look at your rent roll every month. This can be a big one as many managers are bonused on their leasing, so you want to watch out for high turnover rates and tenants breaking leases. If your manager isn't checking credit, income, and references thoroughly, you're going to be the one that's going to pay for it down the road. You're going to have evictions, you're going to have lost rent, and you're going to have property damage. Good property management starts with good tenants. So make sure your manager has a solid screening process and a written set of tenant criteria. Let's move on to proactive instead of reactive. If your property manager is always in crisis mode, it's the anxiety I used to get from a manager that we had. It was always crisis. It should have been more of a red flag in the beginning, but it needs to be a red flag for you. If you have a manager that only calls when something is broken or a tenant's upset, they're not managing, they're simply reacting. You're going to appreciate a good proactive manager because they do the opposite. They actually plan ahead. They prevent problems before they start. When you talk to them, you're going to find out they schedule regular inspections, they walk the property, they track lease expirations, and they strategically manage capital improvement. I know you're wondering, how am I going to know if I have a proactive manager or not? Well, I can tell you a couple ways. One is they're going to approach you about ways that you can improve the performance of your property. That's a good one. Another one is to ask for reports such as annual operating budget, and it's going to include forward-looking leasing, maintenance, and CapEx planning, and they send them to you immediately, so they have them prepared already. You have to remember, reactive equals crisis. Proactive equals stability. Next, you have to think about weak tenant relations. In real estate investing, you have to consider your tenants are really your business partners. They're the ones that are helping you pay the bills. If your property manager has poor communication with them, it damages the tenant relationships and increases turnover risk. You're going to find with a great manager, they know how to balance professionalism with service. They're going to keep tenants happy while protecting your ownership interest. I always suggest with an owner to review the tenant satisfaction reports quarterly and ask for updates on any friction points. Next, we move on to poor lease administration because leases can be very complex and mistakes can happen very fast and they can be very expensive. If your manager misses rent escalations or reimbursements or camera reconciliations, you're losing revenue. You'd be surprised how often landlords discover missed rent increases or underbilled expenses years later. So here's my pro tip to you guys. Audit your lease abstracts once a year to ensure everything is being billed and collected correctly. All right, let's move on to the next red flag, and it's high staff turnover. Inconsistent staffing can create a lot of problems. If your property management team keeps changing, that usually means the company is understaffed or most likely poorly managed. It leads to gaps in communication, missed details, and very, very frustrated tenants. Every good real estate investor knows that consistency does matter, not just to you, but also to your tenants. Consistency is going to help you build your community, and it's going to help you stabilize turnover rates. And believe me when I tell you, tenants will notice when new faces show up every few months, and they're going to wonder why. I'm going to give you guys a pro tip on this one. I want you to make sure you ask about the team structure and average employee turnover before hiring a property management firm. And I don't want you to just ask about the manager and the leasing staff. Ask about the maintenance staff. And I'm going to tell you why. If there is high maintenance turnover, it might be an indication that they're not paying well, and the quality of the work is probably going to be substandard. All right, we're on to the last one, and it's no market awareness. Your manager should be doing more than collecting rent. They should be helping you protect your assets' market position. If they're not tracking competing properties, looking at move-in specials, market rents, or occupancy trends, you're missing opportunities to adjust your strategy. All right, here's my last pro tip for the day. Request a quarterly market update and rent comp analysis, especially before renewals or major capital projects. If your property management company avoids these pitfalls, then you've definitely got a solid partner. Now, if they don't, it might be time to start interviewing replacements for them. And thank you for watching today, folks. If you found this video helpful, hit that like button, and if you could, please subscribe. I share weekly insights on commercial real estate investing and brokerage. Now, if you could, please drop a comment below and tell us your worst property management issue that you've had and how you overcame it so we can swap some stories. And I'll see you again next week.